All right, so the month's been closed out. Your bookkeeper finished doing all the work that they need to do. They've reconciled your accounts, and now they've delivered your financial statements to you. And it just looks like it's a completely foreign language. It looks like gibberish, especially the statement of cash flows. That's the report that for some reason people just sometimes have a hard time understanding. But if you don't understand your cash flow, that means you're kind of running blind. I'm Dan Murch. I'm the owner of Blue Collar Back Office. For almost 10 years now, we've been helping small businesses run and understand their financials so that they can make good, informed decisions and help their business grow. Today, we're going to talk about how simple and easy it is to understand your statement of cash flows. Now, understanding your numbers shouldn't be reserved just for the bookkeepers and just for your accountant. You, as the business owner, should understand the numbers that you're receiving every month, understand how to look over these reports, and understand what's happening in your business. So today, we're going to talk about a cash flow statement, what that means, how to read it, what each section means in simple terms, no crazy jargon. And then we'll talk about some real life examples of how the actions, how the activities in your business can be impacting your cash flow that don't necessarily show up in some other reports that you might typically look at. Now, what is a cash flow statement? It's actually really simple. It's what money came in and what money went out, all broken out into different areas of your business. It's not the same as your profit and loss. It's not the same as you're just looking at your bank balance. As we've talked about in past videos, you can have a profitable business. You could be running a high profit business, have a very strong quarter, but still be running at a negative cash flow. So this report is as simple as it sounds. Cash flow statement. Money in, money out, whether you were up or down over whatever period of time you're looking at. Now there's three main sections to a cash flow statement. First is your operating activity, right? So this is the stuff that's the core of your business. The activity that you did to generate revenue, pay your bills, profit. These are the types of things that will show up on a P&L, but on a cash flow statement, it's usually very simplified, only a couple line items. You're not looking at gross profit or things like that. You're looking at accounts receivables, accounts payables, how all of those things, your profit actually impacted your cash flow over any given month. Very simple, very easy to understand. The next is your investing activity. Now, this is like long-term stuff, all right? So you're putting money away, you're purchasing property, you're purchasing equipment, stuff like that. Seeing a negative in this area isn't necessarily a bad thing, but this is where all the long-term stuff happens and the impact that it has on your cash flow in any given month. You're paying your mortgage, you're doing things like that. All that stuff kind of falls into here. You're putting money away for a long term. Everything that kind of falls into this section. This is not the type of thing that you'd normally see on your P&L. And the last thing is your financing activity. So the types of things that would fall into this area would be loans, owner's draws, things like that. Long-term payables, again, things that aren't happening and impacting your P&L, things that aren't being generated by the revenue that you do, but they impact the business, okay? So this is a good way to gauge what's externally impacting your finances. So a lot of people, they get caught up in the operating part of it, and it's really important. That's the core of your business. That's your revenue that you're generating and the expenses that you're paying. But that's not always going to be positive just because your P&L is positive. Now, over the long term, if month after month you're looking at your statement of cash flows and your operating activity is generating a negative cash flow, that is a red flag. So you want to be looking at this on a monthly basis to see whether my business is bringing in more cash than it's sending out. It's as simple as that. But these three sections is it. That's all. That's all there is to a cash flow statement. It's not as overly complicated as you might think. How some of the reports get put together, I understand. It's just a bunch of numbers on a piece of paper. And sometimes people just look at it and they zone out and that's it. But when you think of it as just those three simple areas, operating, investment, finance, and what the impact is on your business, it's not as complicated as you think. Now, what are some reasons that your cash flow statement is really impactful and really important to look at? Let's think about a contractor who, again, looking at their P&L, they're looking like they're doing great. They're generating a lot of profit. They're working. Their schedule's busy. This theme has been very familiar for us in some of the videos that we've gone over, but their bank account is struggling. They feel really tight. And the reason why, when they're looking over their cash flow statement, they see that, yes, they're generating a lot of revenue and they're generating a lot of profit, but they're not getting paid. It's tied up in their accounts receivables. They're making all their payables. They're not collecting their receivables. That's impacting their cash flow. They've purchased equipment. They decided they were in a growth zone and they wanted to purchase some new equipment, but they didn't actually plan it out to tie in with how things were happening on the payable side and the receivable side. So now they have a big payment to make on equipment, or they made a large investment, a down payment, something along those lines. And that's putting a lot of pressure on the cash flow. So understanding these things, understanding your cash flow statement, and then doing a little forecasting like we've spoken about in the past really helps alleviate some of that stress, because now you can start planning accordingly to what's happening in the business. You know what your pipeline is. You have a general idea of when money's going to come in. You have a general idea of when money's going to go out, and you can make informed decisions about when the best time to kind of kick in this growth and make these kind of big decisions and not feel the pressure that you've been feeling right now. So that's it. Not so scary, right? But you have to be looking at these things on a regular basis. This is how you can make smart, informed decisions about your business moving forward and really inject some growth into your business. Now, at Blue Collar Back Office, this is what we do. We help business owners not only track their numbers, but actually use them as tools for moving forward. So if you have a hard time understanding this, or you just want to dive a little bit deeper, please reach out to us. Schedule a consultation. This is the kind of stuff that we love talking about. Leave us a comment below, like, subscribe, ask us questions. We really appreciate it. We love getting to interact with you. Thank you all for your time. Have a great day.